Did you know that the real power of technical analysis is in reading order flow? Today, I will show you how, with two indicators, the volume profile along with the cumulative delta volume, to identify key points in the market, where the smart money is flowing in and out. First, let's talk about the indicators we're going to use. The volume profile shows us the volume traded at different price levels, highlighting areas of high activity, also known as checkpoints. These areas often act as support or resistance. On the other hand, the cumulative delta volume indicator measures the difference between cumulative buying and selling volume, and with candlestick mode, we can see when buyers are absorbing selling or vice versa. This gives us a clue as to who is dominating the market in those key areas. Now let's configure both indicators. To add the volume profile, we will use the indicator called Volume Profile Fixed Range Support and Resistance Levels by user V. Rainabanana. Although it has several parameters that you can adjust according to your style and strategy, we will use the default settings. With this, you will clearly see the areas of higher volume. These areas are the most relevant because this is where the big players are accumulating or distributing money. The second indicator is called Cumulative Delta Volume by the user Lonesome Blue. In the parameters of this indicator, choose the candlestick option to get a clearer representation of the delta action, and enable Heiken Ashi candlesticks to smooth out fluctuations and identify trends more easily. Now, let's see how you can use this combination to enter the market at key moments. Here we have a support zone identified by the volume profile fixed range, which shows that the price is interacting in a high volume zone, suggesting a possible accumulation or distribution. The important thing here is to watch the behavior of the CDV candles. If you are in a support zone and the candlestick color changes from red to green, this indicates that buyers are beginning to absorb selling pressure. This color change can be a signal to go long. On the other hand, if you are in a resistance zone indicated by volume and the candlesticks of the CDV change from green to red, it means that sellers are starting to dominate. This is a sign of a possible short entry. Remember that the color changes in the cumulative delta volume candles are key to identifying the exact moment when order flow is leaning to one side of the market. This combination of indicators allows you to enter the market with confidence, taking advantage of the moment when the big players are taking positions. In this support zone, we are seeing significant cumulative volume on the volume profile, suggesting that the big players are taking positions. Add to this the change to green candlesticks on the cumulative delta volume, confirming that buyers are absorbing the selling. This is our confirmation when both indicators are aligned. Don't forget to place a stop loss below support or above resistance to manage risk appropriately. In short, the volume profile gives you the most important price zones, while the cumulative delta volume with candlesticks tells you who is really in control, buyers or sellers. Together, these indicators allow you to anticipate important movements and make better informed decisions.